Hey everyone, welcome to the weekly review. And we have another gap up pre-market due to the suggestion that we're going to have a trade deal between the US and China, or the hopes that we will. We have a clear breakout above, actually, we have it from Friday, a clear breakout above the mother candle from October 10th, and continuation above today with another gap up. If I go to US 500, we can see it more clearly. Pre-market on SPY, we are approximately at 683, just below 683. So another gap up. Breadth recovered quite a bit, and assuming today is going to close green, is going to go even higher. So we broke the divergence there. Let's go back here and SPY. We had a soft CPI print coming in below expectation. So this means Fed can cut this week, and they will likely do so. And the only problem, in my opinion, remains the shutdown. Due to the shutdown, people will spend less for Black Friday, depending on when that ends. If it ends within the next couple of weeks, it will affect spending more or less. But people not getting their salaries and people not feeling financially safe will drastically reduce spending for the uh, holiday season. So that means we are at risk of actually getting recessionary data depending on how quickly the shutdown ends. So that risk remains. This means Fed will continue cutting more. So everything that benefits from lower rates should perform well. We also have earnings this week for mega caps and many other names. But we have Google, we have Apple, we have Microsoft, we have Meta, and Amazon. So if they do well, I expect the rally to continue. Now, question is how will this play out, or how high do we go? First of all, this is an imposition from the 2021 top, and I matched the dates. Basically, I took October 14th and took it until here. Uh, and the other thing I used to do the prediction is ATR levels. And let me switch to position, which is the quarterly ATR levels. So first of all, this green line here is the long trigger, and first target is here. Oh no, sorry. First target is here. I couldn't see it because I put a line there. And if we hit this level, we have the golden rule, which says that it is very likely that by the end of the interval, meaning the quarter, meaning end of the year, we will also see this. And it pretty much fits with the setup we had here. Basically, initial target is this 687 level. We then correct back and retest potentially this, maybe go even lower and consolidate a bit. And then we do the final push into year end that the target is 701. And it looks pretty reasonable to expect this kind of behavior. Obviously, it will not be just as. Actually, I'm going to leave this because it's quite. I think it's quite plausible that we see something like this, uh, potentially go a bit higher here, and then we get the big correction in January, going into January. Now, this is not a lot of upside, like meaning we already played out most of it already. And assuming from this level we only have around 2.68% of upside for the rest of the year, and even if we go down, like this is still like 4%, not quite a lot, not a lot. But given how some of the mega caps have performed, and there's technical setups that I explained in the earnings preview video, I think we will get dispersion going into year end, meaning some names will perform well, some names will perform not so well. Overall, the market won't go up that much, and we will have a slow grind up or constant pullbacks. Then we go back up, then pull back again, and we go back up. And this will be caused by some of the mega caps underperforming. I am bullish Apple, Google, and Amazon. Not so bullish on Microsoft, on Meta, Netflix. I think it has done a cycle top. Uh, MicroStrategy is not performing very well, even with Bitcoin recovering a bit. Question will be Nvidia, which doesn't look good, doesn't look bad, but it kind of hits it. It already hit its what was the ghost print target, which was 195.95. I don't think it actually hit it. 195. Oh no, it did, or just came slightly below it. Tesla is a question mark. Like in theory, it shouldn't do well, but we saw the flows from the previous weeks, and it could go higher to like 500 or something like that. So point is, I think we get a dispersion market, meaning a lot of either mega cap overperformance and the rest of the market goes down because mega caps are going to bring the most of the earnings increases anyway, and the rest of the market will not. Or uh, actually not or. I don't see a way in which the whole market goes up at the same time. It's just not that kind of setup. Especially as more recessionary data will come in due to the shutdown that will affect earnings, especially when data from retailers on Black Friday will come in and it will reflect the fact that people did not buy as much this year, again, due to the shutdown. And all of this will make it difficult for the market to go up in a significant way. So we get dispersion, we get some rotation into staples. I mentioned PG and CL, which I expect will see rotation soon. And like I said, mega caps will be split. We need to see a topping behavior like we did in 2021, and we saw Meta in 2021 top out in August, no, in September actually. So Meta was already topping out and it actually dumped in February, but it was already going in a downtrend, similar to what Netflix is doing now. Netflix as well in 2021 it topped out in November. Nvidia 2021 topped out in November. So by the time the market topped out in early January and we started going down, many of these names were already in a downtrend and they weren't at highs. I think only Apple and something else was at highs. Some of them were like Apple. Yeah, Apple was at a high. So I kind of expect the same thing here. Like some of the names will start a downtrend. They won't break down because we cannot have the market breaking down and making new highs. But this pattern we should be seeing this pattern forming as of now. Like we're almost in November, and things will start showing or building up towards the bigger correction that will be 10% plus that we will have in January, or the potential for it begins in January or end of December. And we will see various names top out. We will see rotation into staples to reflect recessionary pressure. And that's kind of the whole setup moving forward. So that's it for today. Not a lot to tell you guys. Uh, just a short recap at the end that we actually see the pre-market open. So we open up here. Target is to get here. If we get to here, it is very likely that we will get to the 700 level by end of year. But expect pullbacks, expect this to be quite swingy. We'll see how earnings play out this week. And final target, if we hit the 687, is going to be to hit 700 sometimes by end of quarter. It could be very soon, it could be late, like a Santa Rally kind of thing, but it's very likely that we get here, we do a pullback, and then we go for 700 later in this year. That's it for now. Have a good one. Bye bye.